Just this me.
Money in the way for what they got to say. I throw it up, it's falling down, it's definitely in the way.
Welcome back, guys, to Chart Talk episode 11 with Shake and myself. If you just started watching, drop us a little thumbs up. We're going to run through the market outlook, member ideas for the week, good trade, bad trade, top idea, as well as book of the week. Shake, you want to get started with the market outlook?
Yeah, absolutely. So we made a conscious decision. We're not going to be as obsessed with the news cycle because it's just all mumbo jumbo. It's all bullshit right now. All the headlines are just like Trump trying to manufacture. So we're going to focus on the price action. And there's a lot of troubling concerns in the price action of the market leaders, I would say, and also with the overall the broad market. I think the SPY right now, I think this range, since we broke down from highs, I'm looking at this as more of a bear flag, seeing as every time we get to the top of the range, there's just no buying. And what leads us up to get to the top of the range from support to resistance are utility stocks, consumer staples. We're not seeing the software names break out. We're not seeing the same market leaders. A great example I've been talking about in the Alpha Chat is Viva Systems. They're a healthcare stock. They do clouds for big pharmaceutical companies, make it a lot easier for them. Their growth has been insane. They're a domestic company, so they have no headline risk. Like whatever's going on with the trade war in China, it doesn't concern them at all. They just had a blowout quarter. They're increasing their sales like crazy. Their guidance is up. Everything's up. Nothing bad about their support. And the stock moved lower. So when I see things like that, that's like investors just aren't taking the same risks that they were. We've seen this stock with less than the earnings they just dropped, with less growth, just rage, just 5-6 straight quarters of decent earnings, gap and go, decent earnings, gap and go. Now they had this quarter where they had outstanding earnings and they really raised guidance. The market sold them. So it's like that's telling me the market's not really ready for the risk. Traders aren't putting that same risk on. So I'm very cautious right now. I personally think this range is going to break down. I'm not sure. I'm not banking on it. I'm still tracking my favorite names, but there's just not as many names. So I think this is definitely more of a time to be cautious. I think you want to be more hands off this time. Really focus on your best ideas. You don't want to be trading like crazy just because the market is in this range. It's not like it's an easy time for shorts right now. It's not an easy time for longs right now. The only people that I think are making good money right now are scalpers and market makers, people like writing options and things like that. Because in this chop, it's just, I actually saw an amazing stat the other day that when volatility is above, when the VIX is above a certain level, I forget what it was, that technical setups work a quarter of the time, whether it be short or long, just because there's so much chop that you're going to get stopped out. You're going to get chopped up in the bullshit if you try to have a tight stop, or if you try to have these big picture ideas and you're on the wrong side of the market, you're going to get hurt. So overall, I'm just saying it's more of a time to chill and wait, because I think we have this huge September Fed meeting. I think once that gets out of the way, and if we do get that big rate cut, that could be a great trading environment for the market. But right now, this up and down shit is just so difficult to navigate that I think it's better to be hands off than putting money to work in risky names right now. So overall, I've been a lot more hands off, I'd say.
Yeah. I mean, even today alone, I got hit on AEP, which is a utility, on a breakout. And it's like, if I'm catching a breakout in a utility name, it's like, that's, right on par with what you're saying.
Right. Just like that OKE stock we'll talk about later. Like, it's an amazing chart, but it's an, I believe, energy name or something like that, utility name, whatever it is, a flight to safety stock. And, we're seeing those be the best setups in the market. What I usually do in my weekend scans, I'll take the S&P 500 and I'll sort it by percentage gainer. And that's how I really find a lot of relative strength and relative weakness, because it's like I'll see all the best stocks clustered at the top and all the worst ones at the bottom. And all the top stocks that were all the strongest stocks have all been utility stocks. So that just tells me, I don't even have to look at the SPY to see that we're not in a great market environment, just by seeing that utility names are getting all the risk right now. So, a little more hands-off time to be patient. I think we'll have great trading into the year end. I think we got to figure out this range first. I think we got to wash out this range. But I think if we test that, what is that, like 270-ish on the SPY? I think I think if we get down there, I think that could be a great buying opportunity. And then, from there is when I'll take it from there. But right now I'm taking it a day at a time. I'm really hands-off. I was telling you earlier before the video, I got my mind right this weekend. I'm feeling back. what I did was I completely disconnected. I got an Airbnb with my girl and my dog, 6 hours south of Denver. There's no Wi-Fi. No, these people haven't even heard of cell phones. And so I just disconnected. So I was completely away from the news cycle, completely away from charts for 3 or 4 days, just getting my mind right. So now I came back with this full mental capital, and it just shows me I've been doing way too much. I've been trying to catch every breakout, catch every headline, and figure out what the hell it means. But, the only thing that matters right now is the price action, and we're seeing it's not there in the high beta names and the risky names. So it just tells me to be more hands off right now. The trading will come. It always does. The setups always come. So be patient. You don't got to make your whole year tomorrow or this week, or you don't have to be the best trader in the world in this chop. So just getting back to those mentally sound principles, really helped me get my mind right. So I'm really ready to go into this year end.
I like that.
Yeah.
That with that little monologue over. Well, let's jump into the member ideas. We'll lead off with Heaven. He had he had HZNP through 28.
He said this at the beginning of the day.
Yeah,
it's funny. It's breaking down right now. It's just fact of the market. We had a weekday in the market. Anything that looked good coming into today probably had a tough day. So yeah, in time through that 28, it's a really nice level actually. But it's just breaking down today, and it shows us this chart's going to need a couple weeks now to get better, to repair and all that. So definitely a level you want to keep on your mind, but don't think we'll see that anytime soon.
Yeah. And then his other one was Zebra, ZBRA through 210.
I love this setup. It's another one that's just a factor of the market today, getting sold off. That 210 level looks awesome. I think this one could repair a lot more quickly than HZNP. So I think we could have this one through 210 in the next week or two. I like this setup a lot for sure.
Nice. Good job, Heaven. And he survived that storm down in Miami this past weekend, so he's doing good.
Yeah, holy shit.
See, we got Brian.
Your Bahamas are done, huh?
Yeah.
Dude, never going back, huh?
Pivot the T trips going forward.
Oh my God, I wonder how our puppy friends are doing.
Oh God.
Jeez.
Not good. All right, so we got Brian Trung. He had a couple ideas. He's looking at NVIDIA through 174.
Oh man, I bet Higgins is loving this. This NVIDIA, this NVIDIA isn't for me. It could work out, it could not. I just think ever since it gapped down, ever since I had the crazy October 2018 sell-off from 290 to 150, it's just kind of basing still. Stock doesn't have a lot of interest from me. I don't really like the setup. I know there's a lot of NVIDIA traders out there who have a better read on this than me, so maybe their opinion is a little better. But I don't know. I think there are better names out there, or I think it's just a time to be selective. I don't really like the setup. That's it.
Let's see. He's also we talked about OK. This is a name actually I've been.
Okay.
Yeah.
This makes so much sense.
Is we got like the energy sector as a whole, again, pretty banged up. Like it's the closest sector that's near its 2019 lows. So if we do get weakness, we're going to probably see it first in the weakest sectors like energy. So that's my only hesitation with this name. But other than that, it's like through 72, I'm still going to take it. I'm still going to risk $2 in it. But I have to just still keep my review that if the market does get weak and it's just sell off, this name is going to sell off with that sector as a whole as well. But I'll take that.
That's a beautiful chart.
Yeah. That's what's also surprising is energy is so beat up that this name is flagging at high. So you look at like other oil names, Schlumberger, these names are just destroyed, and this name is just like, nope.
Wow,
don't.
SLB, $30 stock?
Yeah.
Oh my God, you remember the 95 breakout we bought in 2014?
We bought it through, I remember buying it through 68 back in 2018 too. A little base break. So the one thing actually, this company I'm pretty sure does more on like the actual transporting of the oil, where like Schlumberger is more oil price sensitive. So that might be one of the reasons why this thing is flagging, because it's like a toll taker. It's just moving gas from A to B. It's not necessarily worried about the price.
Gotcha. Makes
and
sense.
then the last one he had was RP through 65.
Yeah, we've been talking about this RP. I feel like, we were talking about the Alpha Chat. That's where I came from. Yeah, that 65, 66 level is like must buy, macro level, software name, just been setting up since when did this level first start? October 2018. So we're approaching a year. This thing has been flagging. This one's like one you don't want to miss, especially it's getting tighter near resistance. And actually, the market sell-off is actually helping this setup because it was kind of going straight up into resistance, and it would have been one of those. It's like, how do I buy this thing? But the macro level's so good, the daily's too extended. So now this one's just kind of chopping around near that resistance level. If the market finds its footing and this one can beast that 65, 66 level, I think it's going to be a really good setup, like a big picture setup.
I think even like comparing this like NVIDIA, like these both got absolutely destroyed in the same period, and like this is back at highs and flagging, where NVIDIA is like basically bear flagging at lows, and it's like similar space, like similar sector, but they couldn't, like NVIDIA couldn't really turn it around or hasn't as much. And this RP is clearly shown that it can get back to those highs. So between his like three names, it's just like kind of get rid of NVIDIA and focus on the winner or the leader.
Yeah, absolutely. So, and one of the things I dislike about NVIDIA is that it's one of these TV names. It's one of these, like, it's mentioned every day on TV or something's going on in the news, or that I would rather trade a stock that no one's heard about, no one's talked about. This RP, for example. Like NVIDIA, everyone talks about it every day. To me, it's been out of play for like, a year or so. Mm-hmm. It's like, I don't see the appeal in the name at all.
Yeah.
So it's just like, and especially when it's like becomes like a crowded name like that, where it's like Kramer is talking about it every single day. I just hate trading those really popular names.
Yeah, I agree 100%. That's why I hated AMD for so long.
Yeah, exactly. Same shit.
Yeah. Let's see, we got Joe DeFrank. He is, so this is a little bit different because he's in maturity, MTCH from 81. He bought it like that support buyback. What was that on like August? I think it was like the 14th. So he's already in, and he's like, I'm looking to buy through 88. So it's really not like a position for us to start, but it's more, his opinion was like, should he be adding through 88?
Yeah, no, I like this name a lot, just fundamentally. They're the owners of Match.com and Tinder and all this stuff. Jan was telling me, Jan, our boy out in Amsterdam, he's like, I love this match long term. I'm on Tinder, and you can't get any matches unless you start paying for it. Mm-hmm. And if you look, and their earnings last quarter were like insane because of it. So mm-hmm. It's just like, and like dating apps aren't even going anywhere. They're only going to get more popular. So I like this match really a lot long term. Through that 88, needs a little more time. I don't think you should add anything in this environment. So I think you just kind of stick to the stock you got. But I just like the name. But don't add 88, not in this environment.
It's killing me. I'm looking at my trade. I bought it through 60 and I got stopped out break even. And I'm like, oh God.
Oh my God. Oh God, you were on Tinder in those days. Oh man, no.
All right, so we got Tom Van Meter. He had two ideas. He had AEE. Again, it broke out. So
utility name, right?
Yeah. He actually
it's fucking beasting.
Yeah. Broke out. Okay.
I mean, so that's a great adjustment to make. If you're willing to trade these utility names and stuff like that, these are the ones that are the best right now. So AEE, like great chart, great result. Like no surprise there. Just for me, I'm not going to trade. I'm not really going to go after these utility names, stuff like that. The risk reward's not as good for me. I'm not going to get those crazy breakouts. Even though this one did break out really well today, I think this is more of the one-off than the norm. Mm-hmm. But I mean, beautiful technical chart. Cannot contend with that chart at all.
And then his second idea is this ATVI, which is kind of similar to this NVIDIA chart-wise. Just been basing all year under this like 52 half area. Kind of reminds you a little bit of like WDC. Same thing, kind of basing under 58, but like NVIDIA, not the strongest names.
Yeah, I like how this one's more rounded up than NVIDIA. It's kind of making that bowl. Mm-hmm. So I like that a bit, and it's probably worked off all the selling, and it's just been between 40 and 52 for the entire year pretty much. Mm-hmm. So I mean that one may be ready. Obviously that's not going to be at the top of my radar, but I understand the trade and it makes sense buying it like that. Out of a huge base.
Yeah.
So I don't mind it.
Yeah, I feel like also with like where the chart is, like where the stock is like chart wise, you have to realize like how long these things take. So when like a name's top right, like Mitch, for example, like how easy it can just like break 60, even though I didn't make money in it. And in a few months it's up, 30, 40% because there's just no really resistance there. Yep. But then when you have like a name like Activision that's bottom right, it has to contend with all these prior levels of resistance, has to fill this gap. It's got to reclaim 60, 70, 80 before it gets to highs. Like that, this trade is just a much slower trade. So you kind of can't go into this and expect to make 30% in 3 months. This might take 6 or 8 months to get that type of move. So you have to kind of be aware of, where the stock is chart wise and be realistic with kind of what your expectations are.
I completely agree. And I think the number one mistake newer traders make is that they look at this chart and they see all this daylight from 52 to 80. And it's like, oh, all it's got to do is, rip up. It's like it's an air pocket to 80. But really, it's like every $2, every $3, there are trapped investors who are just looking to get out, break even, because they got fucking smoked when they bought this thing last October because of whatever game was coming out at $80, and now it's at $50. And they're just trying to recoup their investment as best they can. So I don't think people realize the overhead resistance and things like that. Like that's why I don't really trade these type of setups at all. So I think that's definitely number one thing to be careful about, and that's number one reason why I avoid them.
Yeah, I actually have like a good chip battery. I'm going to go over kind of a relative example to that when we get to it. On just some chart related. Let's see. After Tom, we got Mike Gallo was looking at FTDR through 52. It's a wild name.
It is a wild fucking name. I love the gap up and that earnings flag it's giving. And it just looks like it opened right at that 52 on earnings day and just sold off. So if we can get above that area, it should be good technically. I actually like this chart. This is a really nice chart. Obviously, I'd like to see 3 more weeks of sideways, but for what we're seeing now, I love it.
Yeah, this is probably the craziest chart I've seen in a while. Like it's
how's that? Yeah,
like 2 different charts after that gap down. It's like, nope, forget about it. On to the next. It's crazy. Gallo, interesting pick. He had 2 other ones. He had TRU through 85.
Oh, gorgeous.
Top right.
Yeah, that's beautiful. Oh, we were talking about this in the beginning of the day. Yeah, the 85 quarter area. That's definitely a spot. I like this one.
And then his last one was Yum through 118, which we've been talking about this one for a little bit.
Yeah, the more sideways, the better. It's a vicious uptrend, so I can't say it's like not a good buy because it probably continues higher through that area. It hasn't really gotten affected by the market chop, it seems, just kind of in this flag. It reminds me of this Starbucks, very similar chart, where it's just like it's such a strong name, so I can't tell you the trend won't continue.
Mm-hmm.
But it's up at the same time. It's up, 90. It's up, 20, 30% on the year.
Yeah.
So it's a tough buy for me, but the trend probably continues through that 118.
All right. So that rounds up the member ideas. Mark had a question about trading around a core, which is a lesson that we talked about taking profits. If you had any recent, trades.
Absolutely. So I haven't been as active, so I haven't been. I don't have too many examples, but the best one I can tell you is this Pinterest, where I bought through 34. I'll circle it when I edit it or whatever. On August 20th, bought that 34, and it was like the stock was going up more quickly than I anticipated. I didn't have a tight entry, so I only bought, let's say, 1,000 shares. And then the next day, when it looked like it was breaking out, I went from 1,000 to 6,000, and so I had 2 different trades on my hand, where it's like I had 5,000 shares on this bullshit stop where it had to work right now, and that's not something I recommend. But that's that. So my core, my first 1,000 shares, that's the one I was giving room to $32 or whatever it was. So trading around the core, it's like I bought off the open that second day above 35, and I was quickly selling that stock 36.50. But the stock that I bought through 34 with a 32 stop, I didn't sell any of that stock. I got out of that break even and whatever it was. So I'd say when you trade around a core, you want to have 2 different trades on your hand. Same trade, but 2 different trades being your risk reward equation. So that's the second day when I'm loading up on 5,000 shares, and I have such a bullshit tight stop because I'm reading tape, I'm finding buyers, things like that, and I'm only selling it for $1.25. That's only because I had like a 30-cent stop on those shares. Mm-hmm. So, but the 1,000 shares, my core position, I had a $2 stop. So I didn't get to sell any of that stock for a profit because it didn't get anywhere near my target for profit taking from my risk reward equation. But I made money on the trade because I could have the tight bullshit stop, and I could, day trade that stock and make the $1.25 on the 3,000 that I sold or whatever it was. Mm-hmm. So I'd say the most important part about trading around the core is knowing where true support is, knowing when your stop is for real, and knowing when you're just like finding a buyer. Knowing when you're day trading and have kind of bullshit stop, and you kind of gotta know that you have to take off into any pops regardless and make that dollar because your stop isn't good enough to look for a $5 move.
Mhm.
So, I do that in my favorite names in order to load up on stock so I can get that pop on the 5,000 shares because I'm not going to be able to get 6,000 shares if I'm risking $2 in a $30 name. It's just not a good trade to me.
Of course.
So it's all about finding entries on the ads and stuff like that, and then being realistic with your stops and your profit taking. Like I made $1.25 on that. It's nothing spectacular, but I was able to make a decent P&L profit because I found that buyer, I found that tight stop, and I was able to kick into the profit.
So I think with some of the guys, it's like they see something, like they see you and they're like, okay, he's got like 1,000 shares, he goes up to 5, he's got 6. And then for you, it's like you can sell a point up, 2 points up, like you can take those moves because you have a lot of stock. I think for him though, it's like, say he's got like 100 shares and it's like, is he selling like 25 shares? Is he, selling 75 and holding 25? Like, I feel like that's for some of those newer guys. And like, I was talking with Jay Kennedy this week and he was like, I'm like so mad at my trades. And I was like, what's going on? And he's like, he's like, I had 34 trades this past quarter and I lost like $40. And I was like, that's it? That sounds pretty awesome. Like relative to like his account size and the trades he puts on. So he does like this whole trading journal. I go through all of it. And I'm like, okay, like your 2 really good winners, you sold them so quick, like day one. Like he bought it, they broke out, and then he's like selling like half his position day one. And then it keeps going another few more points, but it doesn't really have enough left. And then in some of the ones that didn't work, he was like giving them too much room versus like having like a lower day stop. He was having like the prior day lower or 2 days lower because he like liked them more. So I was like, well, dude, why don't you just tighten up your stops just in general? And then in these like winners, when they're starting to work, just try to maybe trail these ones better versus kicking day one. And then when it has a 3-day move, you kind of miss out on it. So I don't know if maybe
no, absolutely. And if you're new, it seemed, he said he liked this one better. But if you're new, you're kind of in trial and discovery mode.
Mm-hmm.
You're trying to figuring out what your favorite setups are. You're figuring out what your risk tolerance is, what your time frame is, stuff like that. So, I don't know if it's right to trade things differently if you're new based on what you like and what you don't like, because you don't really know what you like because you don't have enough data and enough stats to really show what you're best at. So I think if he's taking trades and trading things differently because I like this one versus I don't like this one, I don't think he has a good enough reasoning to like things or not like things yet because he just doesn't have the experience. It just comes with time.
Yeah. And that was something like when I was talking to him, I'm like, dude, when I was your age, like I wouldn't even have made my account last 30 trades. Like you put on 30 trades, like you lost the equivalent of like lunch at Chipotle with your girlfriend. But to learn from those 34 trades, like that's like super impressive versus like being like bummed about it. And then after he looked at it, he actually journaled it because when he first sent me the journal, he just sent me his executions. I'm like, dude, I'm not going through your fucking executions. Like, put up the chart, like circle your entries, so I can see what the fuck you're doing. Like, I'm not going to do the work for you. But by the time he finished doing that work, he was like a little bit more in a better space because he knew where his problems were. And then I had to just kind of like, look, this is the answer, but I'm just going to retell it to you, like kind of avoid these things. So again, hopefully that helps answer, Mark, your question. We went a little bit of a tangent.
Yeah, no, and I'm going to continue to tangent a little bit. So something that really helps me a lot when I'm going over trade review, I print out my intraday executions and all the dots and shit. So I can physically see on a screen what I was thinking at the time, what my emotions were, why I loaded up, what I was seeing, and then kind of have hindsight and then figure out, is this good that I'm doing this? Is this bad that I'm doing? You get so much information by just studying your own trading. And what I've begun doing from what was that book? Market Mind Games. So write down all your emotions like during the trade and stuff like that and during the day. So you can go back, and now when I'm looking at them, I can look back at the emotions as well, and I get some really great data on myself. And I see when I'm revenge trading, let's say, or trading on tilt and just like throwing crazy risk around, stuff like that. So I'd say going over your trades is very important. I think printing them out and looking at your executions can be extremely helpful.
Yeah. In Semi-Smart, one of the last programs, our lessons in Semi-Smart is called Journal Time. And we have like, it's before trade, during trade, and after trade. So it's the same thing. Print out the chart. We show it. We circle our entries, our exits, our game plan. And it's before. I love Pinterest because they put pictures up online, whatever. I want this thing to break 35. I'm in the trade. it's at 36. I kind of want to sell it, but I shouldn't. I'm going to wait to break even. I'm out of the trade. Trade was stupid. I should have held the break, same stop, sure, let's trade work, blah, blah, blah. So, but getting in that habit, then you can see like, okay, I'm not short and highs, I'm not buying low. Like you can get rid of a lot of those things that you don't like about those trades. And unfortunately, a lot of people just want to trade. They don't want to look at their like executions. But if you do that extra bit of work, it's going to help you in the long run. It's kind of making it a habit. So again, we went through all the member ideas. If you want to jump in a good trade, bad trade.
Yeah, I don't have much to show because I only took one trade last week and I got out the same day. I took this ZM short, and then when it didn't break down, I just covered it break even. Mm-hmm. So that's really all I got to say on the good trade, bad trade front. Sorry.
So I had like two little lessons. So for like XEL, again, utility name, we kind of talked about. Like today, I got hit on AEP, utility name. So last week we were talking about like there hasn't really been much action. Not a lot. Lots really going on. Like I've been buying utility names. So in this name, bought 62, broke, started to break out a little bit, boring name, break even stop. And last week it was up near 64. And I'm looking at it, I'm like, I'm in this utility name, this super boring name. The SPY is getting back up near resistance. I'm going to probably up this stop. Like I don't want to give this $2 back in this utility name for no reason. Like I want to take these gains. And you look at it today, and I literally got stopped out like the exact low. I think my stop was 63, like 74. Low is 63.70, and then it's back up higher today. But
it's ripping today.
Yeah, it's ripping. So I'm like, all right, whatever. I messed it up, made money in it. But at least for this AEP, it's the same setup, it's the same chart, it's the same sector, same utility. I got to buy 92, and now this time, same thing. I'm gonna have a break even stop, but hopefully I can hold this name a little bit longer. If it doesn't work, I'll break even. But hopefully I don't kind of push myself out like this XEL, which will be like what I did last week. And the other thing we talked about, the chart location, like the ATVI, the NVIDIA is like bottom right. This EDU was a perfect example where, I bought this big, beginning of the year through 56 when it was really beaten up, like bottom right, but it held those lows, and I bought on the way up, and I sold like 70-ish, like after earnings. Mm-hmm. So it was a good trade. I got like 14 points out of it, but that's kind of like how long it took. It took this name the entire year to get back to 108, to that awesome level that we still bought. And that's kind of like that example where like I didn't have the patience or even the thought that it was going to get back to highs in a year. And that's kind of like that ATVI where if you're looking at it now, it's like, oh, it's going to be this easy run back to 84. It could take a month or two, where it's like, it's probably going to take like a year to work itself out back to those highs.
Yeah.
So once we start talking about it, I'm like, oh, damn, this runs just an EDU. Because I did the same thing. Like I made some money in it. I would have been up 100%, but I just wanted to take that gain, take the 14, 15 points relatively quick. That was in like a little less than like a month. So that was just, my little lesson for the last week or so.
I read your boy's book, Nicky Darvis, how I made $2 million in the stock market. That was probably one of the best stock market books I've ever read. Yeah, I've read so many. That really helped me get back to basics and shit like that. When I was telling you I was getting my mind right, I read that book, and it was just like he would sit out bear markets, and two, when he got all the news flow, it reminded me so much of myself, where it's like I'm getting so fucking caught up by the news and trying to catch every headline. It's actually giving myself it's a disadvantage to myself. Mm-hmm. So and what I was talking about with you, what he would have done is he would have held that winner. Nicky Darvis is holding that winner when he was up like fucking 150K, and he's like, nah, I'm gonna hold it, and he made like 800K.
Yeah. Even talking to like Captain Joe Wilburn, this was like in the beginning of the summer. He was nervous about going to Alaska. He's like, I'm not gonna have access to the markets. I'm gonna be, putting in orders at nighttime when everyone's waking up to that. I'm like, Captain, like the fact that you're gonna be away from the computers, like away from all the noise, like you're gonna love it. And then he comes back, he's like, I had my best month in August. He was up like 10 or 12%. And it's like, dude, you're away from the market, you're away from the noise, just like what he was doing. And that's kind of where I like don't read any news. Like, I don't care, I don't care. Just, because I can't change the news. So it's just
right. And it's funny. I was talking to this guy made millions and millions in the 90s, huge oil trader, and we were just kind of talking and stuff like that. And we were talking about the differences when he traded versus when I traded. And when he was trading, information and headlines and stuff like that, that was gold. That was worth millions on Wall Street because no one had it. Now, every fucking Tom, Dick, and Harry has every bit of news that Wall Street traders have because of the technology aspect, where it's like everything's coming to your phone, every headline, every push alert or whatever. So it's so funny how it's like it went from information was the most important thing to now information might be the worst thing, and you might need to block it out the most instead of trying to get every bit of information. Just like only stare at the price action, only look at the volume, stuff like that. So I mean, that's what I'm going to do going forward. I'm not going to get caught in this news cycle and just chop myself like crazy. I'm just going to let the price action dictate everything.
Yeah. I was with Yeno yesterday, and he was like, we're going through like some of this stuff, and he's like, yeah, like what news app do you use? And I'm like, I don't know. What do you mean? What news? He's like, where do you get your news from? I'm like, I don't, like, no news. I'm like, I don't read anything. Like, any news that I don't care about. And he's like, all I read is news. I'm like, well, that's, you're fucking up your trades because you've got to trade up the news. But anyways, you want to jump into the top ideas of the week?
Yeah. Let me start with my dog, Pinterest. I mean, this Pinterest, it has a really big trade in it. I feel the technicals match the fundamentals. Like, so when I was reading that Nick Darvis book, How I Made $2 Million in the Stock Market, like this Pinterest would be his fucking A+++ setup. It's in this $33 to $36 box. It's a newer stock, newer technology, if you will, and their sales and everything fundamentally going on with this stock is growing like crazy. So when I was reading that, I was like, fuck, like I can't. What my problem is, I try to give everyone so many setups is that I don't focus on the best ones. I'm just trying to catch everything. So like this Pinterest, for example, when it's ready to go, it's not ready to go yet. But when it is, I'm going to be fucking in it. I'm going to be super large. And I'm just waiting around on this one. I'm not trying to, catch every 10 cents in Goldman Sachs and then do, I'm just going to wait around for my best trades. So I like this Pinterest a lot. And then this Avidra, AVDR, newer company. They just had this crazy gap up on some sick earnings where they grew about 40 or 50%. I don't remember the exact number. I just remember seeing the earnings and being like, wow, this is really impressive. So recent IPO, great earnings, similar to that Nicky Darvis box, new product. So it's like through 24, no matter what, I'm buying this one. I like that one a lot. I like that Pinterest. I think more of a long-term play. I think this Huya, Huya. I think I was looking at their fundamentals. They have a great company. They have great growth, and now the price action is slowly starting to follow. I think through at 26 it'll be good. And then this week I'm waiting on earnings. I'm not sure what they're going to be for ZM. This stock is so tight. It's got to make a move in one direction. So my plan is to pretty much go with the direction of the gap on earnings. Wait for an opening range break out or break down and see which one it is. And then last one is similar to that ZM is MDLA. It's in the shitter now, but it's a new tech stock in that software space that we love, and they have their first earnings as a public company coming up. Pretty nice chart, so I'll just watch their earnings. So I'm just gonna see how they report, but nothing to do with them yet. If they have a good report, that's what I'm looking to buy. But that's all I got for you.
Okay. Two that I'm looking at. This WDC through 58. Again, it's kind of like this ATVI. Like this is going to trade. It's going to take some time. It's that base break. Just been flagging on that level for some time.
You know what I was surprised about? I was looking at the semiconductor ETF. I can't think of it off the top of my head, and it looked pretty good. It looked like semis are getting ready to break out. And I was looking at WDC, and I was also looking at Broadcom, AVGO. Kind of looked like it might have bottomed as well. And it didn't have good action today. That WDC looks a lot better. But it was really interesting to see semiconductor stocks not looking so terrible when they're going to be, in the thick of the trade war. So that was the price action for those is not as bad as I would have anticipated. Again, those fucking headlines.
Yeah, that's what. Yeah, so that's what this is named again. This is almost running like ED. Like I picked up WC at 40, I sold at 54, and now I'm it just like Nick Darvis said, it's in a box. They're 58 versus 50, and it's above 58. I want to be in it again, and I know it's going to take much longer than I anticipate, but this is one of those little sneaky deals that I might be patient with. I like it. And the other one again we talked about was OKE, again energy name, top right. It's more transportation, not pulling it out of the ground like a Schlumberger. So if energy can kind of turn around, through 72 versus 70, I have no problem taking that one as well.
Makes sense. Definitely makes sense.
And we got finishing up. We got book of the week.
Yeah.
What do you got?
So I'm getting back to my roots. I told you. So my first week on the desk, back in 2013, on our first desk when we were on the MOOC desk, our boss was like, "You haven't read XYZ, this book, this book, this book." And he's like, "Oh, you haven't read this book?" And it's Reminiscences of a Stock Operator. Fucking classic book. He's like, "Don't come back. If you come back in a week and haven't read this book, you're fucking fired." Which, like, great. But so this is like an absolute classic trading book. This book is about Livermore, Jesse Livermore. I can't believe there's not a movie on this book. He started off, he was the boy plunger. He was like 14, 15, sneaking into these bucket shops, which is like what people used to trade at in retail. And he started getting banned from them, and he became known as the boy plunger. And he has all these trading principles that are absolutely timeless. The book came out, I think, 70 years ago, and it's still top 3 books trading I've ever read with its principles and fundamentals. He was the first one to say, hold your winners, cut your losers quickly. All the basic trading principles you've probably heard are from Jesse Livermore. He's like the absolute legend in the game. So Reminiscences of a Stock Operator, if you haven't read it in a week, you're fucking fired.
You're out alpha. Mine is 7 stories every salesman should read. This is really just talking about, obviously, the title about stories. Stories sell much easier than trying to get your point across. As you can tell in this video, we probably talked about 7 or 8 stories in itself. So it's just easier. Yeah, it's easier to talk about a story than, like, the last time away from a computer is gonna be better if we can talk about Nicky Darvas or Captain Joe. Like, those are real examples, so people can remember those much easier than just kind of hammering over the head with it. But it's a pretty good book, especially if you're like into sales. You'll like it.
Yeah. Okay. Cool.
All right, guys.
All right, wrapping it up.
Wrapped it up. Till next week.
Next week.